Welcome back to Gaps and Glue. My name is Marc Simmons, and I am here with Wayne Moore from the Insurance and Wealth Management Center. How we doing today, Wayne?
Great. Thanks for having me back here.
Of course. So the last couple of episodes that we've had, we've gotten some incredible responses. Very exciting. What do you think about that?
Yeah, there's a lot of stuff that's hidden kind of in an insurance, so we're kind of unveiling it today and in the future.
Yeah. There's a lot of hidden components to insurance policies, and not a lot of people fully understand, what those hidden components are. And our goal is to educate everybody that we work with and that watches our show. Welcome to Simco Media. We're super excited to bring these episodes to you. And topic for today is social media marketing guaranteed to save you money in certain number of seconds. I mean, it seems like it's a pretty popular topic because I think everybody has to have insurance, right? And it's expensive. Cars, things, houses, everything's gotten more expensive. So premiums go up and everybody's marketing on TV and social media. If you come over here, well, we're going to save you a boatload of money.
Yeah, I think it's just that fast-paced lifestyle that we all live now. Everything's immediate or fast. Everybody wants something quick, whether it's food, services, other stuff like that. Insurance is kind of the same thing. I think people look at insurance as like, I don't really want to deal with that kind of thing.
Yeah. So one of the things we want to talk about today is, again, pulling the curtain back on the insurance industry, specifically the carrier marketing that's out there. We are not an agent of a carrier. We are a broker. So our goal and what we do is we try to educate our customers on the different types of policies that are out there. We try to make sure people are properly insured at the best price. Right, Wayne? Would you agree to that?
Yeah, it's a balancing act. You can have the best price, but you may be losing things to get that best price.
Yeah. So again, you hear things like bundle and save, name your own price, save money by switching today. But in reality, what we see out there a lot of times is people can save money, but there's a trade-off. And that trade-off seems to be getting less coverage. Let's talk a little bit about that.
Yeah,
Wayne.
that's probably the main thing that you're losing when it comes to saving money. Usually, you're losing something.
You head up our home and auto division of Simco Insurance and Wealth Management. What do you see traditionally are the things that people would give up if they've met with a different carrier and got a big savings? What do you see usually are the things that they reduce in those policies?
Well, number one, I would say liability, and we kind of touched base that a little bit on the last episode. Liability limits, really important, really, really important.
So let's talk about liability limits, because I think that they are probably one of the most important pieces. What is a traditional liability limit that you would work with a customer on? Give us those numbers, and then tell me what the minimums are.
Basically, here at Simco, we look at the middle of the road liability limits, something that's sufficient if you were in an accident with your car, with another vehicle, could be two vehicles. There aren't always one-to-one accidents that happen. Sometimes they're multi-vehicle accidents.
So talk about the limits. What is the state minimums from a limit perspective? And tell me what that means.
Yeah, the state limits for liability on auto insurance is what they call 2550, and you'll see that on your declarations pages of your policy. The first number being the limit that your insurance company will pay out per person in case you were in an accident. So in New York State, $25,000 is the minimum per person that's required for an auto policy.
Okay. And then what's the 50,000?
The 50,000 is the max per accident. So it may be two people, but the maximum is 50,000 that they'll pay out for the entire accident itself.
Okay.
So if there's more than two people, obviously they're going to cap out at 50,000.
So you hear all the time about around here deer. If somebody hits a deer, what bucket would that come out of?
That's going to fall under the comprehensive. Some companies call it other than collision is another term they use. Comprehensive is kind of the term that they've been using for many years in the insurance industry.
So that would be part of the $50,000 bucket in those minimums?
Nope, those are actually comprehensive part of your policy, which is separate from your liability. So your insurance company is going to pay for the full damages minus your deductible that you have chosen for your comprehensive.
Okay, great. Did not know that. One of my family members just hit a deer the other day, and I could not believe, it didn't look like there was a lot of damage to the car. $6,000. these new cars, like some of the pieces to them, like the headlights and stuff, are incredibly expensive.
Yeah, and on another time we can talk about what's driving the industry up and what the cost of insurance and why is insurance going up every year. In terms of auto insurance, it is the vehicles. People seem to think that, if I have a newer vehicle, it's got all these safety things on it, right? So I'm thinking my insurance can't go up, right? Because it's a newer car. But actually the cost of the parts for the car have gone up quite a bit in the last couple of years.
Yeah. So again, we just kind of went through the bundling, name your own price. So again, there's different mechanisms within the insurance policy that you can manipulate. You can kind of move up and down. That's going to have an impact on your premium. We talked a little bit about the liability side. Let's talk about deductibles, because I see people always asking about increasing their deductible, trying to get a premium to be lowered. Tell me about your thoughts in that space and what you're seeing in the market.
Well, what my recommendations are in terms of deductibles, because deductibles are really your out-of-pocket costs. If you're in an accident and that accident was $6,000, like that accident you were talking about, the insurance company is going to pay out. If they have a $500 deductible, they're going to deduct that $500 off from that payout for those damages.
What if an accident costs more than the coverage that you have? Say you own a home. Maybe you got some assets stored up in your house, so you have an accident, you have very low limits, you don't have a very strong insurance policy, it goes over the limits. Can somebody come after you personally? Can they come after your house if there's an accident or something of that nature where there's an expense above the insurance policy?
Yeah.
Are you still responsible for those costs?
Great question. This is why it's really important in terms of your liability limits on your policy. Anything that your policy will not cover you are going to flip the bill for that.
That's right. So again, that goes back to when you have these really low state minimums. Even at Simco, we don't allow for state minimums. We don't write anybody that has a state minimum because we know that an accident could easily go over those numbers and it would then cause potential impact to the insured, right? And so we really want to make sure, again, great insurance at a low cost is possible. You got to do work. You got to go out into the market. You got to find different carriers to work with. But one of the most important things, especially if you have a house and you have assets, making sure that you have proper coverage in the home and auto space is really important.
Yeah, and just to go on about the deductibles part, a lot of people think, if you raise your deductible, you're going to save money on your insurance. It is true, but it's very minimum.
Yeah.
And when it comes to an accident or something like that happening, you're really going to be flipping the bill for that.
Yeah, and on the home side, we see people, possibly removing endorsements, changing the policy, maybe even, removing an umbrella. What is, kind of give me your thoughts on an umbrella policy, how an umbrella policy works,
Yeah.
and how important is an umbrella policy?
Umbrella policies are really important, especially if you have multiple assets, things you've accumulated over your lifetime, things you've worked hard for, right? You've worked hard to build, a safety net or a nest of your assets and your wealth that you don't want an accident, because it is an accident. I mean, you don't know when it's going to happen, but it will happen. You don't want to jeopardize all the things you worked hard for.
Yeah. The difference between an agent and a broker, kind of just go through that with me real quick. Again, I know, what do we have here at Simco? Something like 15, 20 different carriers that we have access to in the home and auto space.
Yeah, it really makes my job and all of us here at the insurance center is that we have multiple carriers, multiple insurance companies to shop around for you. The biggest advantage of that is not only price, but we're still going to be able to insure them, have the right coverage, but also save them money in the long run.
Right, because you have that selection, right? So if we go to one carrier, we put all the carriers kind of up against each other, gives us an opportunity from a competitive perspective to make sure our customers get the best pricing.
Yeah, and a lot of those agents that you'll see around in your hometown, wherever that is, are what they call captive agents, and captive agents only sell one insurance company, so they're actually working for the insurance company.
So do you think it's possible to get a good insurance policy at a good price?
Absolutely.
Yeah, me too. Okay, so how to be a smarter consumer. Let's just talk a little bit about what are some questions that consumers can ask the people that they're working with, or obviously they can come to Simco to make sure that they have the right limits, the right deductibles. What are some things that they could ask their agent?
Well, I'd say number one would be what changed to make it cheaper?
Yeah. What about like an annual review? Is it important to take a look at your insurance policies to look at, what the coverages are? Tell me your thoughts on that.
Yeah, I think everyone's life changes quite a bit from year to year. It's something you want to look at every year to see if anything in your life has changed. Let's say you have a kid and they're in college now, or any life events that happen throughout your life. Those are things that you want to change your policy, or at least look at your policy and see if that really matches up to what you should have.
And we see the acronym ACV and replacement costs in a lot of policies today. And that's a big thing. That's a real big part of the policy. ACV is actual
Cash value.
And replacement cost.
Replacement cost is basically ACV, but it doesn't take out depreciation.
Okay. So which one is more valuable? If I get a loss, I have a house, have a fire, and I want to replace my house identical to what my house was when we had that peril, if you will.
For your home insurance, you definitely want replacement costs.
Okay. So that's a big thing. Sometimes people will put in the non-replacement cost, and that's going to be less premium. But you got to make sure you understand that you're giving up coverage in order to get that premium, and then you might not be able to rebuild the same house that you had on that property.
Yeah, a perfect example, like actual cash value, which you should never have on your home, is the market value, is what your house will sell for.
Okay.
That's not the coverage that you want.
Right. So if your house is worth $250,000, but it actually costs $350,000 to replace your house, you're going to have a gap.
Yeah. There's so many things involved on a total loss on a home. You're talking about removing all the debris and all the damages from the existing house, even before you even start digging and building a new house.
Yeah. I think the concept here is, guys, ladies and gentlemen, one of the gaps that we see in the market is all of this marketing information out there saying that it's so easy to save money when you're shopping for insurance. And there's truth to that, because you got to make sure that you have multiple carriers and that you go to market and you do your job and make sure that's the proper insurance. But it is so easy to get a cheaper insurance policy that's not going to give you the correct coverage. And
Absolutely.
that's a gap. We see it all the time. And we see people all the time that have policies that are not covering customers correctly. And it's an insurance policy. It's there to protect you when you have something that happens and make sure that you're covered correctly.
Yeah, you're taking a big risk for sure.
Yep. All right, guys. Well, we appreciate it. Make it a great day.